Welcome to iGlobal Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Yesterday, the Australian dollar managed to find further momentum after the Australian GDP data came in better than expected after notching above the forecast of 0.9% and coming in at 1% for the quarter. This is another strong number in what has been one of the few to give the Australian dollar a rise this week. Nevertheless, the growth in exports, particularly in commodities, accounted for half of the GDP growth. Government spending and household consumption were also the other solid contributors. Now, from the back of that, the Australian dollar has found a bit of momentum as it now tackles the 70 resistance. This level at 76.70 is questionable whether it can break because the market is at its point not showing full potential from the RSI to support a further rally. So I'm believing now we're not too far away from a top and towards 77 cents could be a bull trap. Now, the definition of a bull trap is when the market starts accumulating longs as towards this level and then gets caught long because the market plummets. And then from there, it bows out very quickly. Support on the day, seen minor at 76.30, and then into the downside, support foundations is at 75.95. The dollar index is crumbled a little bit to the downside on the support of 93.40. As this tension mounts on the support after posting low of 36, does question can the dollar recover. Now at the present we are seeing a bit of momentum coming through the euro as it tackles the level of 75 and now posts a high this morning of 97. Resistance seen minor at 118.10 and stops above there around 118.20.30 could see initial move up to 18.50 if the dollar continues to break down. We need a recovery in the next 24 hours, otherwise the euro will push higher. The dollar yen still maintaining its direction towards 110.55 with dips still to be shallow with support on the day seen at 109.60. Looking towards 110.55, reassess as we could be looking towards 111.15. I still expect to see dips as a potential buy, as I mentioned, from 109.60. And talking of upside targets, well, the pound has nearly got to its target of 134.50 as it now trades at 134.36 high today. Reassess from 134.50 as we could be looking up towards 135.20.30. And behind that view is that the market is getting a little bit jittery, that we could be seeing a bit of a hawkish stance coming back into play as this month looks towards the Bank of England. Let's see how it plays today. If we see a break of 50, then I do expect to see another 70-point rally. The gold, very, very mixed still, but holds above the 88 support. After challenging this level, did get a slight rally, but then backs away from 1,300. Nevertheless, the market is slightly bearish, but not fully in terms of supporting a breakdown. I still feel the market is a buy from the lower region of 78.88, and I do expect to see the level tackled around 13.06. And wrapping up with oil, the market is also looking for a further down test. And as you can see, that we've got the pole from the bearish flag giving us a measured move down to $62.40.80, with resistance seen at 66.5. And let's not forget silver, because that actually rallied very well overnight, taking out the 55 resistance, and now looking towards the region of 70.85. I expect to see profit taking coming from that region and could see a slight pullback. Well, that rounds up for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the rest of the day that's ahead.